So here's how to stop your business running out of cash as it scales. So if you potentially get an issue on your hands where your bank starts to look like this, right, where there's nothing inside, it's just a load of dusty shelves, then that's a major problem. And here's how you fix it before it becomes like that. So this all comes down to something called cash conversion cycles. So what are cash conversion cycles? Let's just zoom in a little bit. So cash conversion cycles is how long does it take for you to get your money back and that cash to convert into profitability, right? So if you put $1 in today into advertising, how long does it take for that money to come back? So if we look at this example, on day one, you might put $1 in and then you get 50 cents back. So at that point, you've got a 0.5 return on your investment, right? So you're actually losing money on day one. By the time you get to day 30, then at that point, you get to break even. So like, on day one, we're pretty sad. We're not happy about it. And what happens is most people who are starting out, they do this on day one and they go, I'm spending $1 and I'm only getting 50 cents back. And then they just give up. So they don't even get past this stage. Businesses at scale understand that there is a cash conversion cycle. So next you get to day 30. And then on day 30, we look at the return on investment and we go, okay, we put $1 in 30 days ago. And now we are at break even. Now, when we say break even, that doesn't necessarily include cost of fulfillment and everything like that as well. So you have to consider your other costs that you've got involved. But ideally, what you want to look at is after cost of fulfillment and after ad spend and everything else, that you're at 1x after 30 days. Now, you might have a shorter window than this. You might have a longer window. This is just an example. Then at that point, you're kind of like, meh, okay, cool. I put the effort in, but I didn't really get anything back for it. I might as well just kept the money in my bank, right? Day 60, this is where it starts to get interesting. So you notice we've gone from red to orange, and then we're in the green on day 60. So on day 60, we're like, okay, we put that $1 in 60 days ago, and now we're at 1.5x. So we put $1 in, and we got $1.50 back. Now, that doesn't sound like a lot, but imagine if you put $100,000 in and you get $150,000 back. Or you put $1 million in and you get 1.5 million back. Or you put 10 million in and you get 15 million back. Now, that's a good return then, right? If that's after all your other costs and everything as well. And that's where you start going, ooh, okay, this is getting interesting. Now, here's where it gets really fun. Let's say your cash conversion cycle really, it doesn't all come to fruition until you get to day 90. So by day 90, they've gone through your other offers, programs. They've gone through the main core first product, and they've gone, okay, this was great. I want more. So at that point, then you go from a 1.5x to a 4x return on investment. And then you're like really happy, right? So 90 days ago, you put $1 in and now you get 4 back. So let's take that million example. You put $1 million into paid advertising and you're getting 4 million back. Now that's a pretty good return, right? You're making 3 million every month, which looks really good. Now, then if we look on this one, right, day 180, then we have got a 6x return, right? So at that point, you're like, this is rosy. We want to keep moving forward and keep doing that more and more. If you knew that you could put $1 in and get 6 back, then how many times a day would you be doing that? How much would you spend? How much would you go and try and find as much cash as you can to be able to plow into that if you knew that you were getting 6 back, right? And then where the real magic happens when you get to a year in. So maybe they've gone through your front end program, they've gone through your main high ticket program, but then there's a selection of those that ascend to an ultra high ticket where maybe you're making 500,000 per sale. Maybe you're making $1 million per sale where you're doing something done for you one-on-one. Maybe you've got some kind of profit share or rev share, and you've helped that business rapidly scale. That's when you go from a like 4x or a 6x to a 20x. Now, if you're putting $1 in and getting 20 back every time, then you've got an amazing business there. And this is the beauty of cash conversion cycles. So then the aim at that point is to reduce the cash conversion cycle down. Now, let me ask you this. If you could take the cash on day 90 and make that happen on day 30, then how would that change your business? How much more cash would that put into your business in the short term? Because it's not necessarily about just making the business more profitable. It's about reducing the time of when cash goes in and when cash comes out. If you can reduce that cash conversion cycle down, then it means you can scale faster, because this is what stops a lot of businesses growing as fast as they want, is they run out of cash, right? Or they run out of access to cash. And what happens is that as you grow and scale your credit lines, but then a lot of business owners, because they're not 100% clear on the numbers and the data, then they're scared to go and put that kind of money in, right? They're like, well, let's just see if it still comes out. Like, it's been doing this for 3 years. Are you sure you want to wait? Yeah, well, let's just wait, right? So having confidence and faith in the data to know that that's going to continue, then everything else works. As long as when you go and put that extra scale and then you don't go and change any other variables, right? So if you went, oh, wow, that's working great. Let's say we're spending $100,000 and we're getting 400,000 back. Great, that's awesome. Hey, let's go and spend $500,000, but we're going to go and change the product. What? Right? You don't do things like that. You're going to keep the variables the same. And then you need to monitor all the other lead indicators. So like the initial first customer cost per lead, the cost per first sale, right? Because if your cost per first sale goes up, if your cost to acquire a new customer goes up, that's going to affect the overall return on investment. So as long as everything else stays stable, that means you can then start to reduce your cash conversion cycle down and you figure out ways to do that. Now, how do we do that? And just to highlight that point, long cycle equals slow growth. Short cycle equals fast growth. The only way to overcome this without reducing that cash conversion cycle down is using other people's money, right? So that could be using credit lines, that could be using venture capital. But if you are bootstrapping your business, meaning you are using all your own cash, then a long cycle is going to equal significantly slower growth. If from you getting a customer, like someone becoming a lead to becoming a customer takes 12 months, then unless you've got a lot of cash in the bank, it's going to take a long time for that money to come back, right? So if you're like, hey, great, look, we just did our first year, and in our first year, we put 100,000 in and we got 400,000 back. Great, that's not bad, right? But now you've only got that extra 300,000 to play with, and then you put that 300,000 in, but you know you're not getting that back for again for another 12 months. So you can only grow that quickly, right? Rather than Joe Bloggs down the road, who's your competitor, and he goes, I can turn that money round instead of 365 days. I can do that in 30 days. So then in 30 days' time, you can go from spending 100,000 to spending 300,000 a month. And then another 30 days, it can take that profit again. So if you think about it, let's say he's getting a Forex return and he just wants to put all the money back into reinvest just to get to rapid scale first. So then you've got 300,000, right, that he's spending. He's getting 4 back. So that's 1.2 million. And that's 900,000 then in profit. He takes that 900,000 then in another 30 days. And now he's spending almost $1 million a month within 60 days. Versus the other person down the road who can only spend 900,000 after 3 years. This guy can do it after 60 days. Right? And that's the difference between businesses that can scale and businesses that can't. So the question is, how do you improve the cash conversion cycle? So it comes down to 3 core problems. This is the things that slow down the cash conversion cycle. Either you're not making enough per sale. So that means when someone comes and buys a product from you, they're not spending enough with you at that time, right? So it takes too long to break even. It causes cash flow problems. You can't provide an amazing product either because of that cash flow. So it's all good, well and good reinvesting it back into advertising. However, if you then can't fulfill on the product because you've got no cash left over, then you end up with bad reputation. And then you see businesses just kind of like implode from within because they scale that fast, but then they don't focus enough on the delivery, or they don't have the cash for the delivery, and they don't hire right. And then it all implodes, and then they have negative reviews, and then they have actual detractors of the business rather than advocates, right? A second core problem, not enough leads are turning into buyers. So you're relying too much on your existing customer list, becomes less effective, right? It costs too much to acquire a customer. You don't know what to fix, and you feel like you're banging your head against a wall. So if you're not getting enough customers enough people who are leads and turning them into buyers, then your cash conversion cycle is going to take too long. And then you've also got like not getting enough repeat buyers. So this is all about the lifetime customer value. So it's great if you're making money on the first sale, but if they're not coming back from buying from you over and over again, then your cash conversion cycle, let's say on day one, yeah, great, you make a 2x because you figured out this problem and you've converted enough leads into buyers and you've making enough per sale to get a 2x return on investment. The problem is you've got no other product. Or you're not sending any of those people up. So on day one, you make 2x and then that's it. Now, that means you can turn around a little bit quicker on your cash, great, but you're not going to scale to the level that you want to build the infrastructure that you want and everything else. And as soon as that stops working, then bam, you're back to square one and you've got nothing else going on here, right? So you always want that extra margin going in. So they're the three core problems. And the bonus problem, you don't know what to fix first. So if you don't know what to fix first, then that is a big problem. And we'll go through another video like how to know what to fix first. So how do you solve these? Well, you do the opposite. So you figure out how to get customers to spend more on each sale. You convert and you convert more customers more often. So you get those customers buying from you over and over and over again. So let's look again at the problem. Can't spend, stops growth, reduces profitability. Well, if you're not getting enough repeat buyers, then what we need to do is look at how we can get them to buy more stuff by sending more emails, creating more campaigns, right? All those kind of things that increase that profitability of your existing list. So here's some ways that you can do that. Right, here's how to speed up the cash conversion cycle. So we've got flash offers, right? So you might do a flash sale. You've got affiliate offers, and like you can refer to other software, you can refer to other affiliates. One note on this, as soon as you send those leads to an affiliate, if they potentially could be competing with your offer, you've then created an extra competitor without realizing it. So if you're sending to an affiliate offer, I recommend sending to things like software offers where they're not going to be competing directly with you. Because here's the thing, that person who's your customer can only spend that cash once. They cannot spend it twice. Money does not yet grow on trees. Okay? Even though it's kind of used to be made of paper and stuff. So if you look at the flash sale affiliate offers, be just mindful that you could create increased competition and then they're spending over there and they're not spending with you. Adding recurring memberships in there, okay? So that means then you're increasing what? You're increasing getting customers to buy more often, which is then going to increase your cash conversion cycle. Calling all the customers, finding out what they want, what they need. If you call every single customer, you will make more money. Simple as that. Why? Because you find out why they didn't buy, or if they did buy, what else they need, and then you can sell them those things, right? In an active service, not in a sleazy salesman way. Upgrading people to annual. So if they're on like a monthly membership, like upgrading people to annual, giving them an incentive to do so. Creating virality within your product. Virality could be like like if you go and buy this product, then refer it with a friend and we'll give you this free upgrade, right? Like let's say you've got a software company, you might have something where if you refer it to 2 people, then you get this many free credits for the software, right? Or whatever that thing is. Or you might have an affiliate system to create virality. So the virality can be really helpful to speed up the cash conversion cycle because what it's doing is also increasing the overall return on investment on day one because you're putting $1 in and someone else is also putting that dollar to work for you as well. So really, it's like you're spending $2, but you're only having to put in 1. Then deadline funnels, adding scarcity and urgency in there, creating bundles, right? So taking some of your existing products, maybe repackaging them in a way where you can use those as upsells and downsells, right? Retargeting ads. How are you retargeting at every stage of the buyer journey? You're retargeting through email, SMS, voicemail drops, ads, right? Facebook, YouTube, Google, everywhere. Pricing changes. So sometimes by changing the price on the front end, you attract a better customer that ascends through faster. Sometimes by making the price lower, you will attract a bigger throughput and increase the conversion rates. You want to test those price changes. It depends on the audience. Conversion rate optimization. So that like A/B split testing, ABCDEF split testing. So like testing multiple different variables and then seeing which one performs the best. Multi-channel communication. We talked about that. Email, SMS, voicemail drops, PR. If you can get in the news, right? If you can get media, then that can speed up those cash conversion cycles because it builds, number one, it might sell some product, but also it builds a no like trust factor. If someone's seeing you on the Today Show, right? And at the same time they saw your ad and they've already bought one product from you, and then they see you on the Today Show and they see you on Oprah, right? They're going to have a lot more embedded trust because you've got that borrowed social proof. Then you've got organic content, right? So adding more organic content, so they've got more touch points with you. Amplifying the offer overall, just making it better. Like, how many times do you look at your offer in a year and actually go, how can we make this better? And that doesn't mean just put more stuff in it. Putting more stuff in it doesn't mean it's a better offer. It means, am I answering every objection that someone's having and solving all the problems that they're having with the product? Live events. So you might go and do a live workshop, a live webinar. You might do an in-person event. You might do a 2-day retreat, right? Whatever those things are. And then referrals, building a referral system in where people have actively, when they become a customer, they become a referrer. And this kind of links back up to the virality piece as well. So these are just some of the ways that you can increase that cash conversion cycle. Now, if you just picked 1, 2, 3 of these to implement this month, how much do you think your business will grow? So think about that. Think about then how you can reduce this cash conversion cycle from getting to profitability, and then how to get, like, if you're getting 20x or whatever it is after 365 days, how you can bring that down to 90 or 60 days if you had to. And think outside the box, think in a different way, and enjoy it from there. So let me know how you get on. Have a great one.